I hope you have watched my video on how to save capital gains tax on sale of house property. But I have got many questions on the same subject regarding TDS on the sale of property. Hi, I am CA PRITISH Burton, and in this video I am going to explain in detail the TDS provisions under section 194IA for both residents as well as non-residents from both the sellers as well as the buyer's perspective. So stay tuned till the end, and in case if you have not subscribed my channel, please do it because you're going to get some interesting videos on taxation, finance and many more interesting topics. In case if you're a buyer or seller of a property, then TDS provisions would be applicable to you. The property could be a residential house property, a commercial property or even an industrial property, but it does not include an agricultural property. How much is the TDS that should be deducted? TDS is 1%, and only if the amount or the total amount of the property exceeds rupees 50 lakhs. It is very important to note that in case if the seller is a non-resident, then the TDS rate of 1% is not applicable. Then the TDS rate would be 20% plus surcharge and cess depending on the value of the property. TDS on sale of property, that is 20% plus surcharge plus cess, would be applicable even if the value of the property is less than 50 lakh rupees. The TDS of 20% plus surcharge plus cess when the seller is an NRI is applicable even if the property value is less than 50 lakh rupees. But in case of a resident, it is only applicable at 1% if it exceeds 50 lakh rupees only. Now the next important question is whether the TDS rate of 1% is applicable on the total value of the property or only on the capital gain or profits that you make when you sell the property. So the answer to this is that the TDS is applicable on the value of the property. In case if you sell the property for 60 lakhs, then 1% TDS would be deducted on that, which is equivalent to 60,000 rupees, and not on the profit or capital gains. And in case if you are buying a property which is under construction, then GST would be applicable. In that case, you did not deduct TDS on the GST amount, only on the installment that you pay, you need to deduct the TDS and pay to the government. Now the responsibility to deduct and remit the deducted TDS to the government lies solely on the buyer and not the seller of the house property or any property for that matter. So it is the sole responsibility of the buyer, and you should deduct the TDS at the rate of 1% and then pay to the government. In case if the buyer fails to deduct the TDS, what really happens? The sub-registrar will not register your property, and also there is a likely chance of getting an income tax notice. Now most of them ask me this question, most of the sellers, that whether it is possible to get the TDS back, that is deducted at the rate of 1% or 20%. The answer to this is very simple. You need to file your income tax return, and in case if you have any capital gains, then you need to pay a tax which is at the higher rate. But you have options to save tax. In order to save tax, then you need to watch my video how to save capital gains tax on the sale of house property. Now coming to the NRIs, if the seller is an NRI, then in that case TDS will be deducted at the rate of 20%, and this 20% can be deducted on the total value of the property or on the capital gain itself. But it is a lengthy process. You need to file a form called Form 13 with the income tax department, and it is a bit tedious process and a lengthier process. And instead of that, what you can do is deduct the TDS at the rate of 20%, and then you can claim it back while filing your income tax returns. Now coming back to the buyer's responsibility of deducting the tax or TDS at the rate of 1% or 20% and remitting it to the government. How is it done? There is a form called 26QB which needs to be filed by the buyer. It is a fairly simple process. You did not have a separate TAN, that is tax account number, but you can file a form which is called 26QB, which will ask for details like PAN of the buyer and the seller and details of the property, the installments that you need to pay, and various other details which are pretty simple to fill in. In case if you are not able to do, definitely you can ask for a professional's help. The form 26QB that I am talking is available only if the buyer and the seller both are residents. In case if the seller is a non-resident, then form 26QB is not applicable. Then the buyer needs to have a TAN, that is tax account number, and based on this you need to deduct the tax and pay the tax to the credit of the government. The next important question, if there is more than one buyer or more than one seller, whether TDS is applicable or not. If the aggregate value from these two buyers cross the limit of 50 lakh rupees, then the TDS provisions are applicable. If it does not cross 50 lakh rupees, then the TDS provisions are not applicable. You need to see at the aggregate value and not based on the individual value of each seller or buyer. Friends, these are the very basic questions that I have answered on TDS on sale of property. You might have many more questions and doubt because the nature of the topic is as such. Definitely you can feel free to drop your questions below and I will be happy to answer them. Thank you very much for watching and stay tuned for more interesting videos on finance, taxation and investments. Happy investing.